What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. So today is Wednesday. It's hump day. Certainly feels like a hump day. Shout out to everyone that's been liking, subscribing, commenting. You guys freaking rock. Now, if we have a look at the markets, it's pretty boring, to be honest. Not really too much happening. So as you can see right here, Bitcoin is $3,667. XRP, 33 cents. Ethereum, $124. If you notice, Ethereum is actually taking a little bit of a bigger hit than the rest of the top coins, which we'll get into in just a minute. XRP is still holding steady in second place. We also have Bitcoin Cash and EOS duking it out right here for the fourth spot, and Tether is still holding number 7. So having a look at the biggest gainers of the day, we have Eternity up 32%, Wax 24, Augur 22, Stratus, Power Ledger, Loopring, Steam, Zilliqa, Aurora, Status, Walton Chain, and Repo. All doing quite well today, guys. And overall market cap, if I didn't say it already, 122 billion. Now, having a look at the chart right here, there's not really too much to talk about. It's not very exciting. I don't have really much to say, guys. We are starting to consolidate here a little bit yet again. Volume has dropped off just a little bit, still much higher than where we were about a month ago. So could we have another one of these potential, breakouts? It's possible. We're keeping our eyes on it. I mean, as far as what these guys are saying, they're saying that the lack of strength in the short-term trend of Bitcoin has led other digital assets, especially cryptos with low market caps and volumes, to perform poorly against the US dollar. So still in the latter half of 2019, one cryptocurrency technical analyst, which goes by the name of Galaxy, that's his alias, he said that based on the historical price movement of Bitcoin, the asset could demonstrate large gains in the next 10 to 12 months. The future lies in the study of the past, he says. We're approaching the 420-day mark, which ended the 2015 bear market, and if history repeats itself, we're moving towards several months of accumulation and a new bull cycle starting mid to late 2019. So historically, Bitcoin had taken on average 62 weeks to recover from an 85% correction throughout the past 9 years. So 15 months since the start of the bear market in January would put it around March of this year. So we definitely have our eyes set, not so much in Q1. I'm looking more to around Q2, Q3, but anything could change, right? You never know. There could be some crazy catalyst coming in. I mean, obviously, we keep having things pushed back, so that's not good, right? Now, I just want to end on this by saying the cryptocurrency market is rarely affected by emerging events or news. Rather, the market primarily moves based on sentiment. For Bitcoin and other crypto assets to rebound and engage in an accumulation phase, the market has to become revitalized once again. Similar to the movement of Bitcoin in 2017, some analysts see a boring year ahead for crypto assets in 2019, but are not dismissing the potential of digital assets experiencing an abrupt surge in value. Like I said, there could always be that random catalyst. The same way you can have a black swan event where something catastrophic can happen, you can also have something really positive that could happen. What will that catalyst be? It's anyone's guess, right? Hasn't happened yet, but that still is a possibility. Currently, however, the volume of Bitcoin does remain high at 5.7 billion, and the trading activity in the cryptocurrency market has increased a relatively large margin, suggesting that the bulls are demonstrating some resistance in a low price range. So that's about all I got today, guys, for price. Not much to talk about. Now, the one thing I did want to talk about, however, was we had the hack that happened yesterday over at Cryptopia, and it looks like somebody alerted CZ and said that they were noticing some of the funds being donated on Binance, and he said, just checked, we were able to freeze some of the funds. I don't understand why hackers keep sending to Binance. Social media will be pretty fast to report it, and we will freeze it. It's a high-risk maneuver for them. So, in one hand, you hate these centralized exchanges, but if they're going to be dumb enough to try to sell their funds on a centralized exchange, well, then one of those advantages is that they can freeze the funds. So that's kind of good news coming out. Looks like they're actually, figuring this stuff out. We're definitely going to have to keep on top of that news moving forward. Now, also staying on the topic of Binance, CZ came out with a tweet earlier that he got a lot of criticism for. I'm going to show you the tweet in a second, but let's talk about what some people are saying. Well, actually, this is it right here. So he was responding to the hack that happened over at Cryptopia, and he said, basically he was saying you have three options. Store coins yourself, You fight hackers yourself and guard from losing wallet yourself. Computer breaks, USB get lost. Or store on an exchange, only use the most reputable, proven, secure exchanges, kind of hinting at Binance, or move to DEX, disrupt ourselves. So a lot of people were pretty much taking this as him saying, almost encouraging people to put it on Binance, right? So you see some of the things right here. Why don't you promise insurance if you're so confident with your exchange? When Binance gets hacked, this tweet will become a meme. PS, not if, but when. Then you have Whale Panda saying, there's always a way an exchange could get compromised. If you're 100% confident, you are a scammer. Do not challenge, motivate hackers to accept this challenge. It's a bad idea. As a rule, I would normally never keep my coins on an exchange, but Binance is probably the only one I would consider doing so. So that's like kind of positive. Somebody else said when Binance gets hacked, crypto goes down further, right? So the one thing I do want to say though, is he did apologize. Well, not like apologize, but he came out and he said, some people seem to have misread my tweet. It lists 3 options. It doesn't say which is the better option. He says, in fact, it was more of an ad for Binance DEX. My bad. So that's what people were kind of freaking out this morning, right? But, there you go. Not your keys, not your coins, but much, much safer, right? So this is the tweet originally over here that I was going to show you. There were a few responses to it. The first one was from Pierre Ricard, and this was sort of a little bit of a salty reply. He says, you fight hackers yourself and guard from losing password yourself. Computer breaks, 2FA gets lost. More individual exchange accounts have been hacked than individual wallets. Disappointing, but not surprising to see. Industry leaders spread bad info. And then you also have Jesse Powell, okay? And he says, please do not store more coins on an exchange, including Kraken, than you need to actively trade. Use your ledger or your Trezor. DEXs are, they're not the best. For example, look at what happened with the DAO, right? If you guys remember that, that's why we have Ethereum and Ethereum Classic as well. Open source just means exploits will be discovered sooner, probably not by good guys, right? So there you go. That was what came out this morning. Now, there was some positive news at the end of the light. We do have Binance Jersey just getting released today. Now, this is a pretty major move because what this means is we now have a crypto to fiat on-ramp utilizing pounds and euros with both Bitcoin and Ethereum. So you could essentially buy in using Binance Jersey and then send it over to regular Binance.com if you want to trade, right? There might even be a way to link up your account. I honestly don't know. I haven't tried it. Clearly, I'm in the US. But this is really, really huge, and it's definitely going to be a competition for Coinbase, especially if they are able to start moving this over and have USD to Bitcoin and Ethereum pairs, right? That could definitely put some major competition for players like Coinbase in the space. And I think that, some people have their opinions on Binance. Some people don't like them. Some people say they're the devil. Okay, listen, CZ's a businessman. We know that. But either way, you can't deny the fact that this is going to be a lot better and easier for people to onboard in and out of exchanges. Because think about it. Right now, you get into Coinbase, right? I'm in New York, so I still can't even get Basic Attention or 0x or any of that. But let's hypothetically say you can. Okay, so you buy into Coinbase. All right, you have like a handful of options, right? But if you buy into Binance, well, Binance has a lot more coins, so this could be a lot better for people that are getting in for the first time. Definitely just wanted to bring that out. Now, speaking of keeping your coins safe, obviously, guys, very important to keep your own private keys. I want to let you know that the Ledger Nano S firmware update 1.5.5 is now available and contains new algorithms and security updates. Now, they say that they recommend to update. Now, I'm going to be honest with you guys. Unless it was like an extreme urgent like security breach type patch thing. But me, even when it comes to like my phone, I usually don't update things. I kind of like wait to see the bugs, and then they usually patch it and then I update. Because as you can see down here, some people that have been updating it, they say, to be honest, it works horribly slow. Passing through connect your device phase, installing, uninstalling apps takes ages now, and it seems not stable at all. This person says, the update seems like I'm running out of storage space on the device. Are these being swiped properly after firmware update? What's going on? I can only install 2 wallets. So it looks like Ledger's having a little bit of a difficulty with this update. So You do what you want. I'm not going to tell you what to do. I'm holding off on the update until they get the bugs fixed. Personally, I just don't feel like dealing with a buggy wallet. You know, I don't have it connected right now. I don't really plan on using it today, so I'm sure they're going to upgrade this, but I just want to let you guys know if you do have it, that's what's going on. Also, side note, just talking about some Bitcoin stuff here, I wanted to talk about, I always like talking about adoption, what's going on. Well, here's an interesting statistic from Eduardo. The Venezuelan stock market moved less than $300,000 today. However, local Bitcoin Venezuela has nearly double that in trading volume, around 650K. Now, granted, I'm sure given their current situation, Venezuelans aren't exactly flocking to the stock market. But it's an interesting statistic nevertheless. And the other thing too, speaking on the Bitcoin network, is that their hash rate is up over 35% in the last 3 months, as you can see right here. So November 2018, you had 32 million, and today you have 43.5 million. Bitcoin is once again becoming profitable for miners to mine. So this is very good news moving forward. Now, let's talk about what is going on with Ethereum. Are you holding Ethereum? If you are, you might want to pay attention to what's happening, okay? There's a reason that Ethereum is getting hit a lot harder than the other top coins today, right? So according to Ethernodes, so far 1,567 out of a reported 7,650 total nodes have adopted the proposed changes on Ethereum. However, the data from Ethernodes relies on dev P2P, which according to Ethereum developer Afri, is an inaccurate method of counting active nodes. So on January 12th, he puts the estimated nodes that need to upgrade in preparation to the fork around 44%, which has likely increased further since. However, that was the big concern was, are these guys going to be ready? Well, today, we got hit with something completely unexpected. So Ethereum's long-anticipated Constantinople upgrade has just been delayed after a critical vulnerability that was discovered in one of the planned changes. So smart contract audit firm Chain Security flagged Tuesday that Ethereum Improvement Proposal 1283, if implemented, could provide attackers a loophole in the code to steal your funds. Speaking on a call, Ethereum developers as well as developers of clients and other projects running the network agreed to delay the hard fork, at least temporarily, while they assess the issue. This is pretty important, guys. You do not want your funds to be able to be stolen because of a critical vulnerability in the upgrade. So they say that a new fork date will be decided during the dev call on Friday. Discussing the vulnerability online, the project's core developer reached out to the conclusion that it would take too long to fix the bug before the hack, which is why they are holding off, right? So called a re-entrancy fork, the vulnerability essentially allows an attacker to re-enter the same function multiple times without updating the users about the state of affairs. Under this scenario, an attacker could essentially be withdrawing funds forever. So imagine that my contract has a function which makes a call to another contract. If I'm a hacker and I'm able to trigger that function while the previous function was still executing, it might be able to withdraw funds. This is similar to one of the vulnerabilities found in the now infamous DAO hack, okay? Now, it's also worth pointing out that this isn't the first time Constantinople has been pushed off, okay? It was previously expected to be activated last year, but was delayed after issues were found while launching the upgrades on the Ropsten testnet. So that is something I just want you guys to just keep an eye on that, especially if you're an Ethereum holder. I think that may have been why a few people were selling today, just for fear of, what could happen. But obviously, they haven't gone through with the fork. So really, as long as they don't go through with it, before fixing it, you should be fine. So anyway, moving on to big news from Brave today. So you might have seen this. This is actually from Brave themselves. I'm not going to go through their whole article. It's very in-depth. But breaking it down, long story short, today Brave announced that they are going to introduce their own advertising platform which pays themselves and users. So beginning with their 1.0 release, Brave will be replacing advertising on the web with its own advertising deemed privacy-respecting ads. So users can opt in to see up to 20 ads per day. And after the release of version 1, users will receive 70% of the revenue from the ads they view. Getting paid to look at ads, imagine that. Publishers are disregarded in the system. Yeah, whatever. Brave profits, users profit, but not publishers. Okay. Well, the Brave Rewards program is voluntary after all, and all users must own BAT in order to participate in supporting the sites they love. So, a Brave feature called Brave Rewards allows people who use Brave to contribute BAT to the sites that they visit. When someone turns on Brave Rewards, the browser will tally the time and attention that they spend on each site and divide up that person's monthly BAT contribution among the sites that they visit. Brave ads will allow people to opt in to earn BAT based on their attention, hence basic attention token. It's all making sense now. When someone turns Brave ads on, their browser will begin learning the preferences in order to show occasional relevant ads as system notifications. So ad blocking costs companies millions of dollars in ad revenue and has created an environment where many advertisers no longer trust the model. Several blockchain companies, including Brave, have arisen to try and solve this problem. The problem of mal-advertising, or I guess malvertising, as they put it, is real, and publishers must deal with it. But the publishers themselves do not create the malvertising themselves, right? For example, if you guys watch a video and an ad plays in the beginning, I have no control over what ad you see. I don't know what's going to play, right? So you can't hate the publisher for what you're seeing, right? So that's basically what they're talking about. So the Brave approach is interesting, but so far has not accounted for all parties in the web ecosystem. They go on to say, writers are not paid in variable rate tokens. They are paid in dollars and cents. Professional journalists can't feed their families with good feelings and positive comments. So, hosting bills, yeah. Increase as popularity increases. If everyone were to use the Brave browser, the quality of content on the web would quickly dissipate while Brave would become very rich. This is an interesting point. Brave previously worked on a model of blocking all ads. Now they seek to replace ads, which are vital to millions of websites, with their own ad, giving nothing to the content creator. But the idea is leaving it in the hands of the people watching, the viewers, right? So if you guys, I'm a verified Brave publisher right now. So if you guys wanted to watch my videos without ads in them, you could watch on Brave, and you could allocate, if you wanted to, a small percentage of Brave to just kind of donate to me or something like that, right? So I don't know. That's basically some of the stuff they got going on. But there's also something else I wanted to mention. They're not going to be rolling out the actual token reward for another several weeks, but it estimates that participating users will be able to earn around $60 to $70 this year, and possibly around $224 in 2020. Now, while that isn't exactly a lot of money, it's still money that you didn't have before, and that also doesn't take into consideration whether or not basic attention token will go up in value. Because if the value of basic attention token goes up, then, the value of the tokens that you have also go up as well. Of course, there is a big catch to the whole system. You can't withdraw the tokens you've earned and convert them into cash, at least not yet. Instead, Brave wants you to spend your digital tokens on rewarding your favorite publishers on the internet, such as websites or YouTube personalities. Later this year, however, Brave plans on ramping up the system with ads that appear in the web pages you visit. However, these ads will only share 15% of the revenue to the users. 70% will go to the publishers and content creators hosting the ads. The remaining 15% will go to Brave. So it's kind of funny. Looks like Brave, even though, they're helping out with the ad thing, but they're making a nice little penny in the background too. But that being said, guys, if you're interested and you want to get some Brave, you can use my link below. You can download the Brave browser. I am a verified publisher. I don't remember what they give you when you first sign up. It's nothing major. I think they give you $5 worth of tokens for free to start out with. They might have changed that. I don't know if they're doing that anymore, but if you guys want, you can use that link below and just download it, and they should... Yeah, it should work. So check that out, guys. I guess that's good news. Let me know how you feel about that. Also, real quick, wanted to talk about XRP. We have the first bank to use the XRapid solution. Has now been talking about their partnership with Ripple. So the bank has released a new video about the tech's ability to power a new era of innovation payment solutions and increase processing speed, reduce costs, and enhance transparency and security. If you guys want to watch it, video's down here. It's not even a minute long, but check it out, okay? Also, let's talk about Loom Network announcing the Loom Plasma Chain interoperability with the Cosmos Hub. So they say, today we have some really exciting news to share with you, and it's the first major step for us on path to blockchain interoperability to a Loom multi-chain network. We are thrilled to announce that once the Cosmos mainnet launches, we will be enabling a token bridge between Loom's Plasma Chain and the new Cosmos Hub. Once Cosmos decentralized exchange is live, you'll be able to send your non-fungible tokens, your NFTs, collectibles, whatever, from the dApp running on Plasma Chain to the Cosmos network for trading. Additionally, holders of the Cosmos Atom token will be able to trade their tokens for ETH on Loom and deploy EVM smart contracts to Plasma Chain, which will make it possible to send and receive tokens from Cosmos's main net. This cross-chain usability is a big win for both chains. I like Loom Network, guys, I do. I'm a fan of these gaming things, these platforms, right? So definitely check that out. Pretty cool. Also, for you guys out there that are Zilliqa fans, they did a recent interview over here. You can check that out. They actually asked them questions, about the impact and sustainability of blockchain gaming, non-fungible tokens as well, which are definitely massive. They asked them about their sharding and, their consensus, their protocol, scalability, etc. If you guys want, I will drop that below. It's a pretty good read. Check it out. Also want to talk about this, there's a lot of interviews today. There's this short segment, about 8 minutes, that came out. They're calling it the OmiseGO video paper. And if you want, it's just another good example of, what OmiseGO is, OmiseGO is aiming to do. You've heard the term bank the unbanked. Well, their phrase is unbank the banked. Right? So pretty interesting. Check that out below if that's something that interests you. Now, speaking on these dApps, right, and all these different things like Loom Network, it's really interesting that according to a report from dApp.com, dApps had about 1.5 million users over the course of 2018, the first full year they were measured. The most active dApp category across platforms was gaming, surprise, surprise, followed by betting. That's right, gambling. It's still the most popular app out there. Some of the most successful dApps are definitely gambling dApps, I'll tell you that. But of the 1.5 total users of the dApps across the platforms, nearly 800,000 of them were on Ethereum. So in Ethereum's case, decentralized exchanges accounted for most users of the dApps. Crypto trading is unsurprisingly the first major killer used for decentralized applications. Obviously, that's your go-to. What do? You get into crypto, the first thing you do, most likely, is trade or buy a token, right? Something like that. So, however, the volume transacted on the decentralized exchanges is still dwarfed by the volume on centralized exchanges. Huge issue with liquidity, hence why most people don't use them. It's only a matter of time before a truly usable option emerges, which everyday traders and institutions feel comfortable on. So, although Ethereum has the most users and widest variety of dApps, actual usage of Ethereum programs was less in terms of transactions than other platforms like, for example, Tron. According to dApp.com, Tron is the most ambitious in the dApp field, with a $2 billion project Genesis launched in the second half of the year. In addition, it spends $100 million on Tron Arcade to promote its dApp ecosystem. Tron launched 97 decentralized applications in 2018 alone. But the report also says that the EOS ecosystem is growing slower than Tron's, but nevertheless, EOS processes the most transactions. These metrics are interesting. Ethereum has the most choice, but least usage in terms of transactions. Tron is the fastest growing, but not the most used. Development is slower in EOS, but it seems to be the most actually used. Interesting. Looks like people are really getting a feel for what these platforms can really do, right? And then finally, just ending on the biggest use of crypto and dApps remain gambling. It's always been the case. Using cryptocurrencies allows for several features that aren't possible with fiat gambling. Instant deposits and withdrawals are one, but also universal currency settlement. It's not necessary to convert between fiat currencies in order to gamble on websites. Provably fair also is a term that is native to blockchain and Bitcoin gambling houses, and decentralized gambling makes it even more so. So one of the things why people like decentralized gambling so much is because it's actually fair, provably. They can show you the actual program picking the random numbers. It's all verifiable. You can look at the code. So that's why people like it, because let's be real. Do you guys really trust these gambling websites, like these centralized ones? It's digital. I just feel like it's fixed, right? I don't even trust the ones in the casino, clearly. The house always wins, right? So just pointing that out, guys. Now, also, I wanted to talk about some adoption, and then we need to get on out of here. So IBM has announced 2 separate projects that aim to track supply chains for the metal industry using Hyperledger Fabric blockchain platform. So one is designed to track cobalt from a mine in the Democratic Republic of Congo to a Ford Motor Company plant, while the other seeks to monitor the shipping of metals from a mine in Mexico. So that's just more from IBM, Ford, and LG, and all these other guys as well. Now, I want to talk about this. This is interesting. So according to Credit Karma, Americans lost $1.7 billion in 2018 and had unrealized losses of more than $5 billion, but most aren't planning to claim a tax deduction they're entitled to on these realized losses. So a lot of people lost money on Bitcoin last year, right? Well, even those who sold their Bitcoin at a loss can typically claim a tax deduction before taking, this is from MarketWatch. They say before taking the survey, 61% of respondents who lost money on Bitcoin didn't actually realize they could get a tax deduction for Bitcoin losses, said the general manager of tax at Credit Karma. Moreover, once polled by Credit Karma, 58% said they are more likely to file the losses and claim the deduction now that they're aware of it. So the willingness or lack thereof of the filing crypto taxes parallels to last year's figures when just 100 of the first 250,000 tax filings, which represents 0.04%, reported cryptocurrency gains. However, 2018 was a very different story. Bitcoin plummeted over 70%. The total value of cryptocurrencies fell as much as 700 billion, leaving most of us in the red. A lot of people, right? So why aren't crypto owners taking advantage of a potential deduction? Well, according to the survey, more than half said that they thought their gains or losses were too small. More than a third said that they didn't believe that they had a requirement to file, and a fifth said that they didn't know how to. So Gary Leroy says, I think it's ignorance of the law and ignorance on the part of the tax industry. If you ask the average tax accountant, they don't know anything about it, and they're not asking. They're doing a disservice to their clients. Education regarding taxing cryptocurrencies is a major issue, with many not knowing that penalties could arise from not reporting taxes or losses. Leroy said that he's been recommending tax harvesting to his clients. We spoke about this, where an investor sells a crypto asset at a loss and offsets the loss against another gain. The investor would then rebuy the crypto asset in the following calendar year to reinstate their position. Some people think that that's what they were doing right around the end of November, selling, holding out, getting a loss, and then buying back in, right? But that's what they're saying to do. I'm not recommending you do anything. One funny story we got to talk about before we get on out of here is every year, U.S. citizens spend north of $70 billion on state lottery tickets. That's almost $8 billion more than the entire market cap of Bitcoin and more than half of the entire crypto market as a whole. So over here in the US, we spend more than the entire market cap of Bitcoin on lottery tickets, money that is simply shot straight in the drain, right? I mean, of course, somebody wins, but most of us don't, right? So another mind blower for you is about half of all US adults buy a state lottery ticket. Around 5% of them hold Bitcoin. So 50% of adults in the US have bought lotto tickets, whereas only 5% of them have bought Bitcoin. I'm surprised not everyone has bought a lotto ticket. Isn't that just like what you do when you turn 18? Like, that's like, don't your parents like buy you scratch offs for your birthday? I don't know. And just one more comparison to give you food for thought. Despite gathering controversy over data usage and leaks, Facebook has almost 2.3 billion active monthly users around the world. So that's something to take into consideration as well. Now, how many does crypto have? Well, it hasn't quite pierced 32 million, with Bitcoin Market Journal placing the number at around 22 million Bitcoin wallets as of July 2018. Okay, so Facebook had a head start on Bitcoin of 4 years. It was also a free product until people realized that they were paying with their data. But still, 2 billion for a social media platform compared to less than a third of a billion for a revolutionary, neutral, sound money-based financial system definitely puts things into perspective. So what does this all mean? Essentially. So it's interesting that Harvard professor Ken Rogoff compared buying Bitcoin to buying a lottery ticket, because even with fewer users than the most unpopular of social media platforms and a market cap dwarfed by US lottery sales, the simple numbers alone prove this to be incorrect. Not to mention the obvious fact that when buying Bitcoin, everyone holding wins. When buying a lottery ticket, only one person in hundreds of millions of people win, right? So with odds at something like 100 million to 1, even your chance of riding a spontaneous shitcoin pump are infinitely higher than winning the lotto. Whichever way you swing it, lottery tickets are mathematically proven to get you wrecked, and it's still an $80 billion industry. And on that note, I want to say that's it for today, guys. We're done. It's Wednesday. I didn't forget about you, though. I got to give away a t-shirt. So we have to go to the video from yesterday. Let me copy this, go over here, and let's see who wins the t-shirt. So this is for the Crypto Zombies Unibright shirt. Probably a little blurry right there. We have 374 unique comments. All right, drum roll, please. Let me get that shirt, my man. Finally, XMR Playboy. Looks like you're the winner, buddy, so you got it. All you gotta do is just hit me up in the About section right here on the page, and that is it. Also, to everybody out there, I was reminding everyone, if you're not getting notifications on the videos, YouTube was doing a little bit of work in the background, so just tap that bell notification so you can get updated instantly whenever I put out a video. And that being said, I wanna say thank you so much to everyone who's been liking, subscribing, commenting. You guys freaking rule. Obviously, as you guys know, I do suggest keeping your cryptos safe. I do have an affiliate link for Ledger. If you guys want, you can use it. Helps the channel out. Doesn't cost you a thing. That being said, that's it for Hump Day, guys. I'm looking forward to an impressive 2019. You know, is it going to be as exciting as we thought? Well, it could be a little bit of sideways movements, but that's fine. More time for accumulation and more time for healthy building in the background. So, I am done. That's it. Freaking love you guys. Shout out to everyone that's been liking, subscribing, commenting. You rule. My name's K-Dub. This is Crypto Zombie. Until next time, stay crypto and peace out.